Good morning, everyone. Señoras y señores, queridos colegas y amigos, bienvenidos. It's a special privilege to open this year P2P Financial System International Workshop in Uruguay and to do so here in Montevideo, a city whose horizon looks both to the Rio de la Plata and to the wider world. Today we add a South America chapter to the journey that began a decade ago at the Deutsche Bundesbank in Germany when they started this workshop, with a simple, stubborn idea that we must bring regulators, academics, entrepreneurs together in the same room in order to debate, test, and co-create the future of finance together. This mission remains the same even today. Before anything else, let me thank the host and the local partners for their leadership and warm hosting and hospitality. The Banco Central de Uruguay, the Facultad de Ciencias, Económicas y de Administración, FCA, of the Universidad de la República. Of course, I'm very grateful to the director, Giulio Sanguinetti, and the acting dean, Professor Carlos Bianchi, who welcomed us this morning, just now. And to the many colleagues across the world that came here. I want to acknowledge the community of scholars, practitioners, public servants, entrepreneurs, and students who have traveled from across Latin America and beyond to join us. If peer-to-peer financial system international workshop has become a place where ideas can be argued in good faith and then carried out into policy, into code, into market, is because of you. So thank you very much, and also very happy to see familiar faces that attend and participate in this workshop since 10 years. Since the first edition in 2015, the P2P Financial System International Workshops has stood for a simple premise. Finance cannot be reimagined from a single vantage point. It required few things. Regulators who will listen, academics who will translate, engineers who will ship, and investors who will back the solutions. So I remember the 2015, it was a completely different world. We had just 14 cryptocurrencies in the market, including Bitcoin. The Ethereum technology was just invented, so we didn't have any DeFi markets. We just had some centralized exchanges, a lot of opacity. Real coin entered the market in 2015 in the beta version, rebranding the name into Tether. The total market of the crypto space was just $3 billion. Now we are more than $3 trillion, with more than 25,000 cryptocurrencies in circulation. So the world 10 years ago, 11 years ago, was completely different. Over the years, we have partners with different central banks all over the world. This event was hosted at the Federal Reserve of Cleveland, European Central Bank, Bank of Italy. We have partnered with the Bank of Canada, Bank of England, many other central banks across Europe and North America. That lineage is not about prestige, but it's about methods. Ask their questions, we test publicly, and then we refine. And the question that is always for me a North Star question that I always try to keep and maintain during this event is about these technological innovations that we are kind of experiencing with these new technologies. How this technological innovation can impact the financial institutions, can impact the financial intermediation, can change the financial disintermediation process that started even before blockchain. What the impact of this technology has on the financial stability, the efficiency, the inclusiveness, and the governance. And we never shy away from controversy. Meaning that we don't kind of give for granted that all the technology is a panacea to all the diseases. So there's always a trade-off between the promise and the limits of decentralization, the trade-off between programmability and policy, the tension between privacy and accountability, and the myth and the reality of code is law. So these themes actually are the part of the P2P financial systems workshop DNA, and even for these 2 days they will come with us. We have learned again and again that governance, law, market design decide whether code creates value. In Dubai last year, with the Virtual Asset Regulatory Authority, we revisited the long-standing debates on decentralization, programmability, and mythologies of money. Starting from Friedrich Hayek, Nobel Prize in Economics, who wrote the book in 1976, The Denationalization of Money, we move to the modern stablecoins concept, while acknowledging the gap between ideas and implementation. The lesson that we learned last year was a kind of a putting us forward in terms of humility, because we learned that to build this type of new financial system, we need them to be accountable, we need them to be auditable, we need them to be inclusive. It's not enough merely simple innovation. So these spirits of accountability, auditability, and inclusiveness traveled with us to Montevideo today. So I have few reasons why we are here. It's not by chance, it's by choice. I have 6 reasons I want to highlight. The first reason is that the Uruguay country started a decade of inclusion policy that targeted cash fictions. The Uruguay law 2014, the law of financial inclusion, was a pivotal pro-competitive step that lifted the digital use where it matters the most, recurring payments to the households. This is the first reason we are here. The second, and also I want to highlight actually that this journey continue with the Uruguay, championing the digital race in this part of the world and beyond. Actually, in the latest United Nations e-government survey 2024, Uruguay climbed from 35th to the 25th globally, the top country in Latin America and the Caribbean, and second in the Americas only after the United States. The United Nations report itself highlights uniquely regional solution for cross-border electronic signature validation as a model of practical digital public infrastructure. So Uruguay is also a member of the digital nations, the small club of world's most advanced digital governments. So these are not vanity metrics, these are preconditions for scaling a safe and inclusive financial system where we have a verifiable identity, reliable connectivity, service standardization, public-private cooperation. The other reason why we are here is that the modernization of the payment system in this country. Looking at the Banco Central de Uruguay retail payment reports, by the second half of 2024, the índice de pagos electrónicos versus de tradicionales reached the 77.4, meaning electronic means of payment accounting for the clear majority of payment value up to the previous semester. And under the Banco Central de Uruguay Hoja de Ruta 2023-2025, Uruguay also introduced the Pago de Transferencias within the Sistema de Pagos Rápidos token in September 24. This is not a pilot project, this is a live national capability, which is listed in the World Bank FAST initiative among the region instant transfer systems. The impact has been visible. The velocity of instant transfer in the first half of 2024, Uruguay recorded more than 9 million instant interbank transfers, already surpassing the full year of 2023, with the interbank transfer activity overall double digits year on year. And the ambition is outward facing. The Banco Central of Uruguay has publicly flagged cross-border interoperability with Brazil, Pix de Tourist, and still work to extend the local acceptance to the neighbors' account-to-account rates. Another reason why we are here is the high digital adoption in this country. Digital finance needs connectivity. Nearly 90% of Uruguayan population use internet. And in the country, we have almost 7 million mobile connections. So almost 200% respect to the total population, reflecting a multi-SIM usage typical to mature markets. So Uruguay combined macro stability and regulatory prudence with openness to new rates. That posters show in retail payment reform, in digital identity, and the e-signature infrastructure, and in the government's engagement with global digital policy networks. Last but not least point is the emerging fintech hub in this country and in this part of the world. We have seen a growing impact of the startups, fintech startups in these countries, especially around payments, infrastructure, capital markets, and growing open banking agenda. In the region, like in the LAC region, fintech quadrupled from 2017 to 2023 to more than 3,000, underscoring why the South America is a natural laboratory for instant payments, tokenization pilots, and digital finance infrastructure. The market was valued at more than $13 billion in 2024, and is projected to grow to $50 billion by 2033, at the annual compound growth rate of about 16%. As we gather here to Montevideo, there is a broader global dynamic unfolding. The world has changed, and the currencies are no longer competing only on macroeconomic fundamentals, interest rates, inflation, trade surplus, but are increasingly competing also on technology rates, data integrity, infrastructure, network effects, and governance. 2 years ago, I wrote a piece actually, which was titled "The Struggle for Currency Supremacy." And that piece, you can find online, it reminds us that the United States dollars remain supreme, but it has been challenged. The challenge comes from the fact that the next front in monetary power is not only financial muscle, also include the strength, the credibility, the resilience of the digital infrastructure. And what does this matter for Uruguay? What does this matter for South America? Well, in this new monetary paradigm, infrastructure is not optional. It's a strategic component of the agenda, must become a strategic component of the agenda. If monetary power now depends significantly on technology, on payment rates, identity systems, data transmission, cryptographic attestations, ledger integrity, then countries that build a robust, transparent, inclusive infrastructure are not just improving service, they are shaping their own monetary sovereignty. Uruguay investments in digital governments, instant payment, identity infrastructure, etc., give it a stake in this emerging monetary order. And then there is another point which is important, which is the diversity of monetary reform and competition that create opportunity and urgency. In that piece that I wrote 2 years ago, I argued that stable coins, digital assets, alternative rails complicate the picture, actually, of the dollar dominance of the world that we were used to live for decades. This is not just a theoretical concern. For countries in South America, it means the new financial architecture is now knocking on the door. Foreign, stablecoin, possibly global blockchain, cross-border digital currency network. This brings opportunities, of course, cheaper remittance, greater financial inclusion, more innovation. But we need to be very, very, very careful, because with new innovation, also new risks emerge, a new challenge emerge. Regulatory arbitrage, currency instability, data and consumer protection concern. So the P2P financial system workshop is valuable precisely because it's a forum to examine both opportunity and risk of these new technology applied to financial markets. Another point I made in that article is that the technological infrastructure is the foundation of a credible monetary sovereignty. The credibility of currencies will increasingly depend on things like data integrity, network effects, resilience of the softwares that we are going to use, the regulatory oversight of the technological layers, not just about macro policy. For the South America, this means investing in secure, resilient rails, in identity systems with privacy and verifiability, in governance models that ensure transparency, auditability, and access. It means that central banks, regulators, and private firms need to work together, not just on policy and finance, but also on technological infrastructure. I'm stressing on the need or the importance of the network effects, and on the it's not a choice, it's a need of cooperation. And one country building, a good infrastructure help itself. Instead, several cooperating regionally magnify the impact. So if you think about Uruguay, Brazil, Argentina, other countries align on standards, on rates, on cross-border interoperability, then the South America may not just adapt to shift in monetary power, it may shape its own. I think, and I hope, that's our hope, that the P2P financial system workshop actually catalyzes this type of connection. So it's not merely about local innovation, domestic innovation is about participating in emerging multiplicity of monetary architecture. So the final point on that article that I wrote is about, trust. In this new architecture become the core currency. The strength of any digital assets for payments rate will depend not only on code, but also on the accountability, the effective regulation, the consumer protection, and the public trust. In a context where technological failures, fraud, opacity, that rapidly erode the legitimacy of countries that build trustworthy institutions, strong oversights, legal clarity, enforcement will be better positioned. This edition of the P2P Financial System Workshop offers us not only a chance to learn from experiments in different countries, Brazil, Chile, Colombia, and elsewhere, but also ask a few points. What infrastructure do we need to develop together? What rules of the road must we set together so that our digital rails serve economic inclusion and sovereign determinations, not just global platform and distant norms? Because at the end, in this new monetary system, monetary power will depend less on who prints the money and more on who builds the rails that people trust. So on who's ensure data flow, securely, transparency is back, and the financial innovation then lift the many rather than advantaging the few. I believe that the work will begin over the next 2 years, next two days, grounding on data, policy, and collaboration. I hope we can help the South America take out a credible voice in this emerging monetary order. As to conclude, let me thank the scientific committee, our invited speakers, and the many reviewers of the papers that were submitted who helped create the program. Our thanks, of course, to the Banco Central de Uruguay, FCA, for their partnership and the warm hospitality, and to all of you for making time. Some of you, as I say, travel very far to be here, so muchas gracias to be with us.